Hey guys, it is Julie here with TipRanks, and today we're taking a look at two dividend aristocrats that hedge funds have been scooping up lately. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. I hope you had a great weekend. Today we are taking a look at a couple dividend aristocrat stocks. Now these are stocks that meet a set of criteria, with the main point being at least 25 years of consecutive increases and payments of their dividend. So as a dividend investor, this is a great place if you're looking for stability and growth of that dividend. So today we're taking a closer look at two dividend aristocrats, what it is that they do, and how Wall Street analysts are weighing in on the stock's future. Don't forget to download the TipRanks mobile app if you want to access the wisdom of thousands of Wall Street analysts on the go. Links will be in the description down below. Now let's get right into our two dividend stocks. First up, we're taking a look at NextEra Energy. Their stock trades under the ticker NEE, currently priced at $66.84 per share. Now, they are in the red this year. In the past 1 year, they are down 15%, including 9.7% in the last 6 months. So we might be reaching a bottom here, or certainly getting close to some attractive entry points. They do score a 10 out of 10 on the TipRanks Smart Score, with bullish blogger sentiment and also increased insider transactions. NextEra Energy is one of the largest electric power generators in the United States. This renewable energy company has 67 gigawatts of power generation in operation and between $85 to $95 billion of infrastructure improvements planned for the next 2 years. They are the owner of the Florida Power and Light Company, which is the largest electric utility in the U.S. and provides power to more than 12 million people across the state of Florida. They are also working with the U.S. government agencies to develop and fund green hydrogen energy projects, and they're investing up to $20 billion into hydrogen capital projects with a goal of developing up to 15 gigawatts of renewable hydrogen power generation by 2026. NextEra Energy has been increasing its dividend for 28 consecutive years and currently pays a quarterly dividend of 47 cents per share for a dividend yield of 2.7%. And as I said at the start of our video, our dividend aristocrats today have seen a recent increase in hedge fund activity. In the last quarter, hedge funds increased their holdings by over 925,000 shares. Down below, we can see that detailed hedge fund activity, including some big holding increases by Blackstone and Highbridge Capital, some new positions started by names like Bridgewater Associates and More Capital, and plenty others increasing their positions. For those with the biggest position, we've seen some slight upticks here and some very slight reductions. On top of this, though, we've also seen some increased insider activity on NextEra Energy. In the last quarter, we've seen insider buys of $950,000 from their director. In their last earnings report, NextEra Energy did have an earnings beat, plus saw a notable increase to their revenue. For their Q2, they reported revenue of $7.35 billion. That beat estimates by over $1 billion and grew 42% year over year. Earnings per share came in at 88 cents, beating expectations as well. Their stock currently has 11 analyst ratings, coming in as a strong buy with 9 buys and 2 holds. Analysts' average price target comes in at above $85 per share. That would be an upside potential of about 28% from current prices. Down below, we can see those most recent ratings from the last month, ranging from 19% upside all the way to 38% upside. On the low end, we do have a couple holds from 2 months ago with a low end price target of 13%. And our second dividend aristocrat today is Medtronic. Their stock trades under the ticker MDT, currently priced just shy of $80 per share, and they have seen some volatility this year, up and down quite a bit, overall in the green slightly at 1.8%, including growth of over 2% in the last 6 months. They currently score a 9 out of 10 on the TipRanks Smart Score. Medtronic is a medical device company. The company has a global footprint and is a leader in healthcare technology, describing their mission as attacking the most challenging health problems facing humanity. Their products have helped more than 74 million patients over the years, and they have more than 210 active clinical trials testing out new devices and products. This dividend aristocrat has an impressive track record of 46 years of dividend increases. And their current quarterly dividend is 69 cents per share for a dividend yield of 3.4%. And hedge funds have increased their holdings in the Medtronic stock by 2.5 million shares in the last quarter. So certainly a noticeable increase in hedge fund activity. Down below, when we see our detailed list here, we can see some notable holding changes, including some brand new positions and some others that have been making sizable purchases. Over 438 million here, 484 million. Big positions there. And our top ones, we do have some that reduced slightly, along with other additions to their holdings. Medtronic did report their last quarterly earnings about a month ago near the end of August, where they had an earnings beat. For their Q1, they reported earnings per share of $1.20, coming in 9 cents ahead of analyst expectations. Revenue came in at $7.7 billion and increased 4.5%. Analyst opinions are a bit more divided on this one. We do have 16 current analyst ratings, but come in as a moderate buy. With 8 buys, 6 holds, and 2 sells. The average price target of $94.80 would be an upside potential of 18.6%. Down below, our most recent rating came just yesterday with a hold and an upside of over 8%. In the last month, we do have a downside of 0.1% with one of our sell ratings, but a lot of other ratings around this 24-29% upside, with that 29% being the high end. So there we have 2 dividend aristocrats that hedge funds have been increasing their positions in lately. Let me know your thoughts on these 2 companies in the comments down below, and if you agree with the analyst outlook or not. I always appreciate hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date and providing some information and entertainment. So please make sure you're always doing your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.